Yeah, I think we have a lot of people here. We have the Babylon account as the co-host as well. So let's dive right into it. Welcome everyone. Today we are joined by Sina, who's the strategy lead at Babylon, and Nikhil, who's the co-founder of pSTAKE. And we're going to have a very chill hour. Have an open discussion about Bitcoin, Bitcoin staking, Bitcoin liquid staking, why these things exist in the first place. Dive deeper into shared security, economic security, and lastly, but more importantly, Bitcoin yields, which is something that has not existed in the last 10, 15 years of existence of Bitcoin. So we're very excited to have everyone here. Welcome again, everyone. And yeah, let's dive right into it. Firstly, Sina, do you want to quickly introduce yourself for our audience here today? Give some of your background as well as your personal Bitcoin journey.
Yeah. So I got introduced to crypto in like around 2017. The first kind of like that was my first kind of experience with crypto, and I just only knew about Bitcoin and Ethereum. And then my brother actually joined the Ethereum Foundation and doing some research. So I kept in touch with the ecosystem through him. And then in 2019, I jumped in like a little bit more full time and was managing a fund and to invest in different on-chain and also just private projects in crypto. So I was like very like um, basically dove in 24/7 consuming crypto for 2 years, and that all that the crazy things that happened since in 2019 to 2022. And then in 2022 I co-founded a company uh, um, with the people I used to work with, called Definitive Analytics, which was a analytics platform focused on on-chain activities of users. That company has subsequently been acquired by a company called Grok, which makes hardware chips. So now they're focused on more on AI side. So I was because I'm my first love is crypto. I decided to step back and kind of jump back into crypto. And was just looking around. Didn't have anything. Didn't have a conviction to join anything full time until I met the folks at Babylon a few months ago. And once I heard about the concept and the team, I was very excited to join. So I've been at Babylon for the last 3 months now, and it's been an amazing 3 months already. And excited to see what we can bring to the Bitcoin world. And admittedly, I wasn't a big Bitcoin person before this, but I've since become like a big fan, and I'm excited to can participate in this Bitcoin renaissance that we're going through.
Amazing. Thank you so much for that, and welcome to the space. I think I say it for everyone when I say that everyone's first love is crypto. It's mostly one of the only love interests that also doesn't do you over.
Yeah.
But besides crypto, we would also love to know for the audience as well. What are some things that you enjoy? For example, Mikhil and I, we are both very big football fans. Besides crypto, like what gets you going, or what are you most interested by?
Um, my fiance is an artist, so I actually spend a lot of time looking at art and going to museums, reading and writing about reading about art, not writing actually, just reading, and also reading about philosophy and just uh, things that are just more applicable to life rather than the specifics of the crypto, which I do on a daily basis.
That's amazing. I'm sure, like having the Met Museum in New York, that must be great too. Either from that
Yeah, there's no shortage of museums in New York. That's also great about it.
absolutely. I just get a flashback to this scene from Gossip Girl if I hear of New York and Met Museum, but that's maybe another conversation. Mikhail, coming to you, can you please talk about your journey in crypto, your personal Bitcoin journey as well?
Absolutely, yeah. So, and very similar to Sana, did not like get excited by Bitcoin when I first got into the space. Bitcoin was like a boring asset for me because I joined the space in 2019 and officially full time. And like a lot of people who actually go to university to study, I obviously was studying engineering, but spent most of my time playing football for 4 years, just literally played football and did a little bit of the product side of things, was excited by it. Stumbled upon crypto, mostly Ethereum, 2019, got super excited with smart contracts and the idea of bringing programmability on chain and building a DeFi world. So this whole thing around DeFi back in 2019 was called like open finance, and I was like, what is open finance? But it sounded like a very cool thing. And then people were talking about banking the unbanked. Those were like the big words that people were using. And I'm like graduating out of university, and I've looked at different things. I did a few internships. I was like, no way I'm gonna do a 9 to 5 where I sit in a bank, or I sit in a tech company, write a piece of code that nobody cares about. So for me, it was about doing something interesting, and this open finance, crypto, Ethereum, it all got me super excited. And that's when I decided to jump into the space. I met my co-founder Tushar in Bangalore at a conference, and we decided to start building around Cosmos. Obviously, at the time, proof of stake was like very new. So when I first heard about Ethereum, I was like, wow, this is super cool. But then I was like, and obviously I was I came from a tech background, so I was a tech geek. And the moment I heard about this building your own blockchain, I was like, fuck, you can build your own blockchain. And that's when I looked at Cosmos, got very excited about Cosmos, the tech itself. I mean, I didn't know how it's all going to play out, but the fact that in 2019 2020, when nobody cared about bridges, Cosmos was talking about IBC, light client bridging. Those were all super cool things. Staking was a very new thing. Not many people cared about staking. There were like 2 staking chains that were live, one of which was Cosmos, the other was Tezos. So jumped into staking, immediately saw an opportunity with liquid staking in 2020, and decided to latch onto that opportunity because staking had a bunch of inefficiencies. And that's when we were like, okay, now staking is becoming big. The bet was that Cosmos would grow, staking would grow, POS as an industry would grow, and you'll see a lot more blockchains that have staking functionalities and are independent blockchains. So why not do liquid staking? And this was pre-Lido becoming big. So it's not like Lido was already a behemoth, and we saw that as something and started building liquid staking. So we were early to identify staking as an opportunity, early to identify liquid staking as an opportunity. But I think for me, building for Atom was never exciting, and the last 2 years I spent a lot of my time reading about macro. That's kind of like a good thing in a bear market, that you can actually spend time reading about things that you can't read during a bull market. So I spent a lot of time reading about the world and the macro environment that we lived in, and I was like, wow, this looks really bad. And that's when I started looking at gold as a hedge, because in a bear market, obviously, in a bull market, you want to own a lot of altcoins, historically speaking. In a bear market, you want to only be allocated to BTC ETH. And so I started thinking in terms of allocating to Bitcoin, and then I got very excited with Bitcoin. But the moment, I mean, I've known the Babylon team for a while, and when Babylon was working on the Bitcoin timestamping protocol, which was super exciting to begin with, could reduce unbonding times for POS chains. It was very exciting to begin with. But the moment I heard about Bitcoin staking, and when I actually first, I wasn't sure how it's going to work. But the moment I learned it's trustless staking for Bitcoin, where you don't even have to transfer your BTC to somebody else, you just do it in your own wallet. That's when I got super excited about staking, because BTC staking, because for me, it has always been about staking, liquid staking. And if you can imagine yourself doing that, building a liquid staking business for the biggest asset in the world, then that's super exciting. So yeah, that's my journey with BTC. We started building for Bitcoin staking rather recently, about 3 to 4 months ago. But we are like, we're legit builders. We've been in the space. We've been around for about 5 years now, trying different things. So very excited to continue building, and very excited to be building on top of Babylon. So that's a little bit of my journey. I think I went everywhere, but yeah, in terms of personal interest, Aditya already highlighted. I am a huge football fan, although I've stopped watching football because United. I'm a United fan, Manchester United, and it pains to watch any game anymore. So I just spend some time at the gym. I play football. I go for runs. I'm trying to get in shape for a half marathon. Still a little bit far away from there, but yeah, mostly sports and tech. That's what I do.
Amazing. Thank you so much for that. And it's definitely good times to be a United fan right now because it's off season, so we don't have to watch them play. But hopefully, we'll make it back again soon. Awesome. So now, do you want to quickly touch upon, maybe staking as a concept? and then also transition to where does Bitcoin come into the picture all of a sudden? Because Nikhil mentioned that the early POS chains that introduced staking were the Tezoses, the Cosmoses of the world. So do you want
Yeah.
to touch on that, please?
Yeah, this is actually an important topic to like spend a little bit of time on, because in crypto, I feel like the term has kind of lost its meaning a little bit. People call any sort of like locking your assets staking. So staking to me means that you are providing some sort of service, and you are putting something at stake in order to like attest that you're going to do it the right way, or you're not going to try to misbehave. So if you just lock your something for and to get additional to get yield or some sort of like yield earning program, it's not quite staking. You have to have something at risk, and you have to have something you have to perform a function and have something at risk. And if you don't perform this function uh, correctly, you should have your stake slashed. So this is the concept that, as I would define it. So in the proof of stake world, the holders of the asset will stake their asset or delegate to a validator. The validators will validate each block and or propose blocks, and they will validate them, and they will earn the yield from the block rewards of that POS system. And that's kind of the system. And if they try to double sign or kind of misbehave or try to attack the POS system, a portion of their stake gets slashed, and that's the mechanism for keeping them honest. So this is the background of like staking as a concept. Now, like if we could turn Bitcoin into such a staking asset, it would be a no-brainer, because we have this 1.3 billion dollar trillion dollar asset that's just sitting there, and we're trying if we could make it stakeable, that would be very good. But there are a lot of challenges that presents, because Bitcoin is not a programmable or it has very limited programmability. So if you want to make it stakeable, you have to kind of innovate on several levels. So this is what Babylon has done, and we've made Bitcoin a stakeable asset in a trustless, non-custodial way.
Yeah, and actually, maybe just to add a point there, I think for me at least, how I see it is staking in the simplest form. Again, if I try to explain it too much, it'll get complicated. But I like to think of staking as essentially proof of work, but the work is your economic capital, your capital at stake. So it's exactly that. And I think the fact that you could do staking for BTC, that's pretty much like what Sina said, it's game changing, because you can uh, doesn't mean the Bitcoin network becomes a proof of stake chain. It just means that BTC as an asset can be staked to secure chains, and that's super exciting. Go ahead, Sina, you were saying something.
Yeah, so to make Bitcoin a staking asset, you need to do a few things. First of all, this you can't have your Bitcoin, you can't send your Bitcoin to anybody else. You can't trust it to a third party. That would not be trustless. That would not be self-custodial. You don't want to bridge or wrap your Bitcoin to another blockchain, because that would be easy. Because once you have bridged it to another blockchain, then you have full programmability. So then you can do everything you want, but you're still trusting it to a third party. So that's a no-go. You don't want to trust any oracles. You don't want to allow for altcoin collateral redemption, these kinds of things, right? So you want to be able to make Bitcoin um, stakeable in the Bitcoin, on the Bitcoin network, in the user's wallet, their own wallet, and allow them to validate blocks of other POS systems. And if they try to double sign, then a portion of that Bitcoin should get slashed. This is the concept that Babylon team has innovated on and created, which is the first time Bitcoin can earn yield in a trustless way. Previously, Bitcoin yields were in the last few cycles, it did not go really well, because people were trusting their Bitcoin to a third party. They were often lending it to other people, and we all know how that turned out.
Yeah, absolutely. Actually, on the point of Bitcoin staking and the innovation that Babylon has brought. Obviously, the Bitcoin network has been live since 2008, right? And as you mentioned, Bitcoin is not currently programmable, or there can't be a lot of building that happens directly on Bitcoin. So what it is that was the game changer for Babylon to come into existence? Was it simply just the idea of Bitcoin to be able to stake and secure other chains, or was it certain developments in the Bitcoin network itself, or the whole innovation that Babylon has brought?
Yeah. So the background on this is that Bitcoin is obviously not aware of anything that happens in other POS systems, right? So this is we have to make Bitcoin somehow aware of some sort of misbehavior by the validator, without it being connected or being aware of like other POS systems. So um, one thing that actually led to this being possible was like the introduction of Taproot, and then something called Schnorr signatures. And if you want the details of this, you can actually go to our blog at babylonchain.io/blog, and the Bitcoin Staking 101 series. But it explains it in much more detail. But basically, a special type of signature, which is called a one-time extractable signature, allows you to um, basically time lock your Bitcoin, and then use this special type of signature to also sign blocks on the POS system. And if you try to sign the same block, two blocks at the same height, you're essentially trying to double spend. Then through some cryptographic magic, your a private key gets revealed and some spendable condition gets spendable, and so anyone who can observe those two signatures can take a portion of your Bitcoin. And this is how slashing is possible on the Bitcoin network without Bitcoin ever being aware of the external POS systems.
Amazing. So, would I be right to say that what Babylon has pioneered is essentially adding if and else to Bitcoin when there is no way to add if and else logic to Bitcoin in the first place?
Essentially, but it's basically a workaround on that.
Got it. Amazing. Nikhil, on the topic of Bitcoin staking, now that we know what staking is, how does Bitcoin come into existence? The next layer then becomes Bitcoin liquid staking. With pSTAKE, obviously, pSTAKE has pioneered Cosmos liquid staking. They were the first ones to have Atom liquid staking back in 2021. We've also done BNB liquid staking. How does liquid staking generally, and then compared to Bitcoin liquid staking, are there any changes in how it is built and how it is produced?
Uh, I think it's not that different, to be honest, with compared to other liquid staking solutions, because primarily you have to look at staking again from pSTAKE's perspective. It is about staking, whether BTC secures the Bitcoin network or it secures 20 other chains. It's not the concern for an LST protocol, right? The LST protocol concerns itself with the fact that whatever asset can be staked needs to be liquid. That's the whole concept of liquid staking. So for us, I think obviously there are different challenges when it comes to building liquid staking for different solutions. Like building liquid staking for Cosmos chain, you could do it non-custodially because there is interchain accounts that exist today. 2 3 years ago you couldn't do it non-custodial unless you build the liquid staking solution as a module on the Cosmos Hub itself. Whereas there's no Cosmos Hub, nobody allows you to build stuff, right? Governance would not allow you to build stuff directly on the Cosmos Hub, but with interchain accounts you could essentially control another account on the Cosmos Hub through an account on any other chain. Now those are things you could do to build non-custodial liquid staking. In today's world, I don't think anybody who's claiming they're building non-custodial liquid staking for BTC, I would love to talk to them, but I don't think they're speaking the truth here, because liquid staking for BTC is super complicated today, because like you said, Aditya, there's not many scripting capabilities on the Bitcoin network. You can't really write smart contracts, right? You have to do things in a way which is not scalable. And in this moment, obviously, with the introduction of opcats and BitVM in the next few months, over the next year, we should be able to build liquid staking in a non-custodial way. But until then, it's not. So other than the fact that you have to jump through certain hoops to build liquid staking, it's the premise is still the same, where you essentially allow people to deposit BTC that gets staked via Babylon, and you issue a yield-bearing Bitcoin token, which can be issued on any chain. To be honest, like for us, we are issuing it on the Ethereum mainnet, and we're calling the token YBTC. Y stands for yield-bearing Bitcoin. So yeah, that's I don't think there's much difference in terms of liquid staking across any chain.
Got it. Understood. Thank you for that. Now that we've understood these basic topics out of the way, let's dive into what this essentially enables, right? Which is the whole topic of economic security, chain security, and then also having robust security for chains in the first place. So I think from my perspective, I look at this, whether that's again economic security or restaking or liquid staking, either as a trust marketplace, right? You have the supply side, wherein you have an asset that is highly liquid, that also has a very high market cap when it comes to the economic value of that asset, and the other side you have applications that are ready to consume that economic value. So in this concept, would you like to touch upon what the mechanics or the economics of security look like, from the perspective of a chain, that in the context of Bitcoin liquid staking, you have Bitcoin being locked, you have chains that are consuming the security. Why would they want to do this in the first place?
I think it's very clear, right? And maybe Sina is a better person to answer this. Why a chain would want to get security from another asset is because the economic value of a again, like we started when we started this space, we talked about staking. What is staking? It's the economic value that is at stake for if a validator is malicious. How much do they lose? So if I'm a malicious actor and I want to create problems for the blockchain where I double sign, or I I produce blocks that are not legit. That's a problem because the blockchain is then not gonna be accurate. It'll have problems. So I get slashed. Now the thing is, when I get slashed, what gets slashed should have some economic value. Only then do I feel like maybe I shouldn't do something malicious. In the absence of high economic value at stake, it's easier to attack chains. It's easier to be malicious. And that's kind of what we want to avoid. That's why it's important for BTC to be an asset that is staked across chains, because to acquire BTC is very difficult. To economically, like, if $1 billion worth of Bitcoin is staked on a chain, securing a chain, that's a lot more valuable than an asset that's FDV, a project which has an FDV of $5 billion, but daily volumes are like, $2 million, $1 million, because to bring the price of that asset from whatever $1 billion FDV to a few $100,000 in FDV is not going to take too long, right? And then you can acquire that asset in huge amounts and economically attack the chain. So to avoid those economic attacks on a chain, and to make sure that whatever assets, let's say this chain has $100 billion in TVL, somebody can just steal it if it's not economically stable. So you need Bitcoin as an asset, which is the most stable asset in the ecosystem, in the space, right? To secure these chains. So that's why I see chains wanting BTC as an asset that can secure them, because they want to be resilient to these economic attacks. And for BTC stakers, it's a different story. Why they would want to secure these chains, but we can talk about it. Sina, I'll leave it to you for you to take it
Yeah, I
forward.
think one other point that I would add is that when you are trying to bootstrap a POS system, you have to obviously give away your token so that you can have a validator set that is distributed. So often when POS systems kind of launch, they give away like 20-30% or like sometimes higher percentage of their FTV to bootstrap the validator set, and this is kind of an expensive way to have like to basically fund your infrastructure. So let's say there's a new chain, the stakers are expecting like a double digit percentage interest or a yield, because this is a new asset and it's not been proven yet, and it's not and they're taking real risk, so they need to be rewarded for that. Whereas BTC, the holders of BTC don't expect such high yields. They're happy with single digit yield. So if you can bring the same amount of economic security to the chain with with BTC, you're giving away less of your native token to BTC holders, because they are on average they expect less of an interest or yield. So this increases the stability of the your staking your stake, which is what Mikhail was talking about, but also reduces your security cost. So this is the two aspects of why a chain would want BTC stakers. And from the BTC side, of course, BTC holders, if they can do this in a safe way, which Babylon enables, they would like to have some additional yield for their Bitcoin, and without having to give up their custody over their Bitcoin. So because 1.4 trillion dollars of assets can generate a lot of yield and can add a lot of value to other POS systems, and if you can do it in a safe way, why not do that? So there's going to be a lot of demand from the BTC holders as well.
Yeah, absolutely. It's what you said, right? If whatever trillion dollars of assets can become yield generating and then also achieve the economic security or like economic robustness of an ecosystem, then why not, right?
Yeah,
On the topic of that, I think Bitcoin has never had yields inherently, right? As Nikhil pointed out earlier, it's been a passive asset for the longest time. So how do you see this shift in landscape? Because I think like you can compare staking maybe as the fixed income equivalent of crypto, and I
yeah.
think with finance, traditional finance, we've seen that yields is something that drives finance, right? And that
Yeah.
equivalent in crypto can be staking. And what better than Bitcoin staking, right? So in that context, what do you feel about Bitcoin yields becoming the next big thing?
I think because just like what we talked about, there are a lot of POS systems who want alignment and also stability and security from Bitcoin. So this is a new and very well understood source of yield because we understand block rewards, we understand POS system yields. So we can just connect this kind of network of POS systems to this island that was previously disconnected from them. This giant asset that's stable, that's secure, that it's very distributed, that people already love to hold. So this just creates a two-sided market place that can be thriving. BTC holders get to have some yield on their Bitcoin, and also the POS systems get to pay less for their security budget, and this will create like we hope will create a thriving kind of marketplace. And on top of that, there will be like several more innovations that we're going to be building. And obviously, Mikhail is building a liquid staking protocol. There's going to be other interesting use cases that people will create, like with when the merge happened with Ethereum. At first, there was just Lido, and then now there's like a whole ecosystem of apps and DeFi protocols that benefit from it. Like there's restaking, there's a lot of DeFi primitives like Pendle, and there's um all these types of things that have been created, or like self-repaying loans and all these things. And we're going to see a surge of innovation in the Bitcoin ecosystem as well, that will come after the primitive of trustless Bitcoin staking has been established.
It's actually a very good question because today I was recording this podcast episode with Hakan, who's the founder of BEVM, and he was talking about this whole idea of BT yields on Bitcoin coming through various forms. One of which is restaking or staking through what Babylon is building, and potentially others may follow suit and build competing products to Babylon. But that's one way of generating yield, but this whole premise of why we need yields on Bitcoin all of a sudden is coming from a place where people are starting to say, oh, miners may not make enough revenue anymore.
Yeah,
Bitcoin miners need more revenue sources. So all of a sudden, people are starting to build BTC L2s to justify some whatever fees can be generated on these BTC L2s goes to Bitcoin miners on the Bitcoin layer one. And then the other source of yield, which is more obvious, is the staking yield. So for me, like, I'm still struggling to figure out, like, or at least for me, I don't see a viable path to yields from BTC L2s because you really need a lot of activity on these BTC
yeah,
L2s. And I think like BTC L2s, honestly, like my views are a little bit too bearish here. So I won't go there because for me, BTC L2s, it looks like side chains, millions of side chains, all trying to replicate product A from chain A to product A on their L2, right? So it's like MakerDAO exists there. Okay, I'll build MakerDAO here. If something else exists, so it's pretty much the same stuff everywhere. But I think for me, what's more interesting is this idea of staking BTC. I think it's so much bigger than EigenLayer and restaking for ETH because, sure, you know, restaking ETH is a phenomenal idea. Great, it can add a lot of value to smaller rollups who keep coming up and who need security. But I think the whole idea for BTC yield, it becomes really big when you take a decade long view, because the decade long view will show you something very interesting. that today we see smaller chains that want security, so they're going to come borrow security from ETH and BTC and these different assets. But the moment you have like a very important chain, a very big chain that's doing actual revenue, like Ethereum does real revenue, right?
Right.
A lot of the Ethereum yields come through actual activity on the network. Same with Solana. Potentially, in the future there will be one or two more chains that will actually be the hub for DeFi activity. And I can see a potential future where, and I'm not sure, who's going to do that, whether it's Babylon and pSTAKE have a role to play in it or not. I'm not sure about that. What I'm certain of is there is a future where BTC can actually be staked to secure these really big layer ones that actually have yields on them, and those yields are
Yeah.
sent over to BTC stakers. So BTC staking is much bigger than POS staking that you see in today's form, which is inflationary yields for stakers. It's actually securing chains which do DeFi. It's not a BTC L2 most likely, in my view. At
Yeah.
least today it doesn't seem like it, but yeah, that's my view. So BTC yields through staking are a lot more uh, you know palatable narratives for me
Yeah.
than through BTC L2s.
I think there is I'm interested in a lot of the enthusiasm that is surrounding BTC L2s, but obviously every L2 or L1 needs to have a fresh perspective and have actual use cases for what the user wants to do. It's not just pure alignment with Bitcoin is not enough. You need to actually innovate at the application level and at the user experience level to like really in like kind of delight users, right? So, and we should have a lot of experiments, and we'll see which ones will survive and thrive in a world where BTC is stakeable. But I also like one point about the thing you said about miners is that miners are also big holders of BTC, so they're not just buying like mining BTC to sell it, but they need to sell some BTC to fund the operations. um, if they have access to other forms of yield, then they don't have to sell as much BTC because they can use the yield to fund some of the operations as well. So mining becomes a little bit more sustainable as well. And that selling pressure from miners also gets a little bit alleviated because um, the yield is gonna be what pays for a lot of their operations potentially, or at least
Yeah,
in
I
theory, as
agree.
possible.
No, I agree. Actually, in practicality, also, I do think there was a period where, with the hype around runes and ordinals, like,
Yeah.
miners were making decent revenues through, uh, you know, through other forms of activity on the network. So it's not just whatever block rewards come through. Although I think that needs to sustain over a long enough time horizon,
Yeah.
right? Which is why like staking is the and that's been the bet that we've made since 2019, that staking is going to be big because it's about cash flows. Everybody in the world who cares about cash flows is going to care about staking at some point, because on a monthly basis, and yields need to be predictable. If yields are unpredictable, that's a problem. The problem with most BTC L2s is that today you cannot predict any yields. But the reality of Ethereum is that you know it's a chain that has been running for a very long time. You see certain
Yeah.
yields, and similar Cosmos, whether inflationary yield or not, Atom gives about 10 to 20% in staking rewards. Obviously the inflation parameters can be changed, whatever, but I think, like, again, I was just doing this mental maths, and obviously you can you can correct me if I'm wrong, but I think what the Cosmos Hub's FDV now should have gone down. I haven't checked prices recently, but was about $4 billion. Staking rewards of around 15% a year, like maybe inflation about 10-12%, let's say, whatever that looks like. $40 million worth of Atom are issued every year. Even
Yeah.
if 10% of that inflationary reward is shared with BTC stakers, that's
Yeah.
not 40, sorry, 400 mil. So that's $40 million worth of rewards being shared with BTC holders on an
Yeah.
annual basis. So if $1 billion worth of BTC stake, that's 4% yield on your BTC stake. So, and that's through just one chain. Now
Yeah.
imagine more chains with higher FDV, better PMFs, and
Yeah.
generating real yield, real revenues. Then miners actually can just take their BTC and cover their operations. So I think that's a future where I can see something happening rather than BTC L2s and these other plays.
Yeah, just to add to the conversation, do we see a future wherein BTC L2s are being able to be what they are called, which is actual L2s and inherent that native Bitcoin security? through maybe some staking mechanism or maybe through Babylon's mechanism itself that
Yeah.
these L2s are using the actual Bitcoin security to be secure.
Yeah, so basically, like, and a true roll up on Bitcoin doesn't really quite exist yet because obviously Bitcoin is not aware of any other external like system. But that's there's some there are some like innovations happening in that space, like with the introduction of Opcat and BitVM, and these will help like create like some optimistic rollups on Bitcoin, and then you can call it like real Bitcoin L2s, right? At that point. Right now, the L2s are just in terms of alignment with Bitcoin, not necessarily with like it's not a true L2 or roll up from a technology perspective. But in one way that these projects can align themselves with Bitcoin is to at least be accepting Bitcoin stake to kind of stabilize their security and provide yield to Bitcoin holders and attract Bitcoin holders and provide like philosophical alignment with Bitcoin. So true rollups are a ways away, but philosophical alignment with rollups it can happen through staking with Babylon.
Yeah, that's great to know that it can happen. But do you see that happening, like personally as well as from Babylon's perspective? Do you see Babylon maybe being a protocol that secures app chains with BTC to being a protocol that secures every chain with BTC, whether that's Ethereum, whether that's Solana, BTC L2s?
Yeah,
Because
I mean
at the end,
the concept of Babylon is much larger than any just one category of chains. It doesn't have to be just Bitcoin L2s or Cosmos or any POS system can in theory be secured by uh, Babylon Bitcoin staking. In fact, we also released a blog recently that we can secure, for example, rollups. So even Ethereum rollups. So right now there's a lot of discussion about the decentralizing rollup sequencers, but rollup sequencers are not in a hurry to decentralize because they make so much money from the fees. Well, one other way to keep them accountable is to ask them to stake their Bitcoin, stake Bitcoin to secure the sequencer and to make so that if they try to misbehave or submit something different to the user and then the L1, then their Bitcoin gets slashed. So there are like a lot of different ways where you can use Bitcoin stake to create alignment and create bring security and um, accountability to different POS systems and rollups in the in our space. It doesn't just have to be for Cosmos or Bitcoin L2s or anything like that.
And actually to jump in, and so far I was just having fun, but now I have to do my job as well. But I'm kidding. What I wanted to say was this is where pSTAKE comes in, guys, because there's so many of these chains that can be secured through BTC via BTC staking through Babylon. As a user, you don't know which finality provider to choose, how to delegate your BTC, which chains are the chains that you would want to secure. That's where pSTAKE comes in because there's so many consumers. How, as a BTC holder, would you avoid getting slashed? And we've been building in Cosmos, which is one of the go-to market directions for Babylon, where a bunch of Cosmos chains will be borrowing security through Babylon. For us, we understand the Cosmos tech pretty well, how staking works in Cosmos, which node operators, how they work, all of those things. That's kind of where pSTAKE comes in, where there's yields coming in from so many of these assets. How do you like as a BTC holder, are you gonna claim your tokens from 10 different consumer chains? Are you gonna go? You're gonna have to figure out which DEX to go to and swap these assets. Some assets may be on some chains, some other DEXs. Not everything is going to be on Osmosis, for example. Some could be on the chain native. But yeah, all these assets are converted into BTC, and as a BTC staker, all you see is Bitcoin rewards, and that's, I think, super exciting. So that's what pSTAKE will do here.
sorry, Mikhail, I think we lost you there for the last 10-20 seconds. But
Yeah,
you might
I
continue.
was getting a call, but yeah, I was just saying, like, yeah, with so many different assets in which you earn these yields, and all these different assets are not gonna be like, you don't know which DEX to sell these different assets on, or what to do with these different assets. pSTAKE comes in and pSTAKE swaps these different assets into BTC for you, And as an end user, all you care about is Bitcoin yields and your BTC stake. You get your rewards in the form of BTC itself. So that's the role that pSTAKE plays in the Bitcoin ecosystem, while making sure your BTC that is staked is still liquid.
Yeah, that's amazing, and that does have a great ring to it as well, right? Auto compounded Bitcoin yields. You put Bitcoin to work, you earn in Bitcoin. I think that's the future that we're headed towards. Yeah. Talking about maybe some of the latest developments for both Babylon and Bitcoin, sorry, Babylon as well as pSTAKE. Sina, I think Babylon's testnet 4 recent cap went live. So, do you want to talk a bit about what's the current status of Babylon? When can we
Yeah.
see a potential mainnet yields on Bitcoin and all these things?
Yeah, so basically, the testnets is a preparation for our mainnet launch, which will happen very soon. The dates are not super set, but in the next month or so. But the Babylon testnet is basically um, a an exact replica of the mainnet phase 1, where we will start accepting BTC stake, and you can delegate it to finality providers, and that will last for a few months, and then after that we will launch mainnet phase 2, which is when the chains go live, and they can actually the finality providers can actually validate the chains and start producing rewards for the BTC holders.
Amazing, and I think with the latest updates as well as the test and launches of Babylon, I think we've been gotten used to getting the Signet network congested, because whenever Babylon raises its cap, it becomes hard for us to test things, and hard for us to also being a participant there. Talking about testing things, Mikhail, I think pSTAKE also has a testnet, right? Do you want to talk a bit about that?
Yeah, absolutely. So we recently went live with our testnet where people can deposit BTC, and that BTC is deposited or staked via Babylon. So people see BTC staking in action through pSTAKE. We haven't issued the yield bearing Bitcoin token yet. That's next phase for our testnet, while we go live on mainnet very soon as well with Babylon's launch. So yeah, I think the stats, Aditya, you may know much better than me, but I believe there were like 3,000 plus users in the last less than 48 hours now.
Yeah,
But feel free to chime in.
yeah. Let me roll up the latest stats. I think we had an internal dashboard somewhere. Yeah, so we
There
have
are no roll ups yet. Kidding.
yeah. So we have around 3666 users that have tried depositing SBTC into pSTAKE so far, despite the congestion on the network. And I think it's around 2.5 SBTCs that have also been deposited into the protocol. So I think a great bullish start to Bitcoin, not only staking, but liquid staking overall. Yeah, actually talking about Bitcoin liquid staking, Sina, because I'm sure there are going to be a lot of providers that come into existence here with pSTAKE as well as a few others. With Babylon being that base layer, kind of equivalent to ETH POS system, not being a Lido or not being a marinade or sort of the ecosystem, but the POS mechanism itself in that sense. So from an yield perspective purely, how do you see this changing the game for Bitcoin? So, do you see like new financial primitives being kind of built on top of Bitcoin and Babylon, or do you think that we'll start off with the same basic DeFi primitives that we've had, and then maybe there is an innovation that changes the game for DeFi with Bitcoin?
Yeah, it's always hard to kind of imagine what will happen after a primitive has been created. So, of course, the same the existing the protocols, or kind of like the games that have already been invented, will happen. But also, I'm excited to see what net new things can come to life with this new primitive. So it's like a cop out, but I don't. I'm just excited to see what comes out, what happens with new stuff on Bitcoin. But of course, we'll see all the same stuff that happened on Ethereum also on Bitcoin, like Lido, restaking, like like uh, Pendle, like all sorts of DeFi things. Like where people separate the yield from the principal. They're self-repaying loans, all sorts of maybe like stable coins backed by Bitcoin, all these types of things. But I'm excited to see what things that we can't even imagine come to life.
Beautiful. Nikhil, from your perspective, do you think we are in a pivotal moment and we 10, 20, 30, 50, 100,000 years down the line, we see the formation of Bitcoin yields be the thing that changes the world?
I mean, I won't be alive 10, 20, 30,000 years from now, so I honestly don't care. But no, I think this is definitely a very interesting moment, especially for me. Like, I was not here, when we had the gold revolution and all those things. So for me to be here in this moment and be contributing to the space, I'm like very excited about it. So I do think yields and Bitcoin becomes a very big thing. Obviously, it is what will drive the future in a big way. And to be able to play even a small part is obviously very good and very exciting. So yeah, I mean, the last time I got so excited about anything happening in the crypto space was like October, November 2020 when Compound kicked off, DeFi summer, and then we started seeing all these Yam Finance and 20 other things. I am actually like just as much excited as I was back then. After a very long time, I didn't see anything that was super exciting. I think restaking as a concept has been there for a very long time, right? Polkadot had shared security, Cosmos doing shared security, ICS, but EigenLayer coming in to do E3 staking. But none of those excite me because I don't think it's an asset that people care about to the largest degree when it comes to restaking and staking. So for me, yeah, this is super exciting, and I think it is definitely a pivotal moment. Whether it remains a pivotal moment for the next 1,000 years, I don't know, and honestly, it doesn't matter because Bitcoin is here to stay, and anything you can contribute to is phenomenal.
I had one point that I wanted to get your thoughts on, Mikhail, actually, if you don't mind.
Please do.
Yeah, so basically, like, I think Bitcoin as a staking asset is unique in like several ways, of course. But like one special way that it's unique in is that in a lot of other POS systems, you have to stake your native token in order to avoid dilution. It's not quite real yield, like so if you're not staking your like let's say like 60 or 70% of a native token are staked, so if you're part of that 20% or 30% that's not staked, you're just getting diluted against the rest of the circulating, or like the rest of the supply, right? So you're kind of not, this is not real yield, you're just trying to avoid inflation. However, in the case of Bitcoin, this is not true, because you really get, if you're really getting yield, that's not being issued against dilution of other Bitcoins. It's actually on top of Bitcoin, right? So I think that makes it a much more attractive asset for being a staking asset, because it's adding actual kind of rewards, not just protecting you against dilution of other people's kind of staking rewards. Any thoughts on that?
Yeah, it's a very interesting, I mean, observation because, and it is true, right? POS staking is not about getting yields. It's obviously it's being marketed as a way to get yields, but it's literally about avoiding dilution in most cases, right? Unless the yield is real and comes from network activity. Even in that case, I mean, sure, you're just getting a part of the revenue, so that exists, but otherwise you're getting diluted. With Bitcoin staking, I think it's like, as a USD holder, you can't do anything but to get diluted. It's the same thing with most other assets if you're not staking. But with Bitcoin staking, I mean, I'm with you on this, right? It's a lot more exciting because it's not about avoiding dilution, it's about getting more cash flows. And I mean, I think that is what makes it more special, right? I mean, in a way, there is still you could argue that if a lot of people start staking Bitcoin, and let's say 70% of all Bitcoin in circulation is staked through various means, right? Like all these ETF providers, they use their whatever Bitcoin they have on the balance sheet, they put it on chain to stake. If everybody starts staking Bitcoin and 70% of Bitcoin is staked, would we still say that people are not like, obviously they don't get diluted because the supply remains
Yeah,
fixed.
I think it's different because let's say when you're staking, let's say Solana, you're getting paid in Solana, so more Solana has to be issued for you to to get rewarded, right? Like this Solana doesn't come out of thin air. It kind of comes out of thin air because it kind of has to
Does.
be issued. That way you're just protecting against dilution. Let's say the 99th percentile of people who are getting or staking, the next basically the last person who stakes is purely, they're not getting anything new. They're just protecting against themselves against dilution, and there's no real form of yield. It's purely
Inflationary.
it's almost like DeFi 2.0, like Olympus style, like kind of yield where
Yeah.
the yield is so high, but it's not meaningful. Like whether the yield is 10% or 100% is not meaningful in that context because everyone's getting diluted, everyone's getting issued more tokens, but no one's getting more ownership of the overall asset. Right? This is what I was saying. But whereas
Yeah.
in Bitcoin, the overall asset class is shrinking, or kind of like, we're not shrinking, but at least it's not inflating, or it's somewhat it's not inflationary as much as the other assets. So there's a certain amount of Bitcoin that will be forever in existence, and then beyond that, there won't be any more. So if you get yield in some other form and then you swap it into Bitcoin, at this point you really have more Bitcoin, which is like
Yeah.
unique,
Actually,
right?
what I was gonna say is you're spot on because as a Bitcoin holder, that if all the 21 million BTCs in supply are not getting diluted, what I was gonna say is imagine a scenario where 70% of all Bitcoin is actually staked to secure these other chains and
Yeah,
earn yield on them. Now the rest of the 30% are not getting diluted, but they're missing out on yields that everybody else is
yeah,
getting. So in a way, just to catch up on those yields, you feel like
yeah.
shit, I need to stake my assets as well. So obviously from a supply demand dynamics, they're not getting diluted, but
Mhm.
purely from a mental,
They're missing
like
out essentially. Yeah,
yeah, psychological perspective, you're like, oh shit, I'm missing out on yield that everybody else is
yeah.
getting, so why should I? So I think that will play out, but it's a very interesting observation for sure.
I think it's like quite similar to how treasuries of countries work, right? Like you have a fixed income on it, but you get diluted through other reasons, through inflation and through the printing of money. But here you have a
Mhm.
fixed supply. You're not getting diluted, but you're essentially doing the same job, which is having a flourishing economy and all powered by Bitcoin. Awesome. I think it was a very intriguing, very interesting conversation that we've had for the last hour now. I think I didn't realize it's been an hour. Talking about Bitcoin yields, talking about Bitcoin staking. It's been very exciting. We'll be sure to take out some of the bits that Sina has talked about. The very interesting points that he's touched on, and have them go out on the pSTAKE handle later on as well. But I think it's a very interesting time that we are in currently. I think we were maybe born 100 years too late to explore the earth, 100 years too early to explore the space, but I think just in time to make Bitcoin yield generating, right? It's also the time maybe we change the definition of Bitcoin as digital gold, because it's so much better. Bitcoin is like gold but with yields and a fair launch. So it's a very interesting space to have projects like Babylon built for it, projects like pSTAKE built on top of it, to have accessible Bitcoin yields for the entire world. uh, on that note, I think one last question for you, gentlemen, before we wrap it up. And I won't be too pushy here. I think we've talked about this a bit earlier in the space. But Sina, when mainnet?
Soon, TM.
Soon, TM, love it. Mikhil, when mainnet?
Soon, TM. I think depends on Sina and Babylon. I mean, we are ready.
Amazing. Let's fucking go. Let's make Bitcoin yield generating. All right. Thank you so much, both of you, for taking the time to speak to us. And it's too early for you, Mikhil. It's too late for you. But this was a beautiful conversation, very exciting, and I'm sure all the people in the audience, learned something about Bitcoin staking, liquid staking, cash flows, yields, things as well. And please be sure to follow the Babylon handle. Please follow our speakers as well as the pSTAKE handle to stay up to date about Bitcoin staking and Bitcoin liquid staking.